how to actually start trading stocks, crypto, or Forex. What is the best platform for trading? How much money do I need to start trading? What are the best hours to trade stocks or Forex? Which Forex pairs or stocks are the best to trade? What is the best strategy to use? I will answer all of these questions. By the way, if you wait a little bit, I will reveal exactly step by step how to get a hold of a 200,000 trading account for just $1,080. So I will also tell you how I lost a $56,000 account on the 1st of September in 2023, where the broker just kind of took my money. I will also tell you the biggest factor I look for whilst choosing the right broker. I feel like I have some authority on answering these questions, as I have been a full-time trader for the past 3.5 years now. I actually increased my account in the last 3 months by 50%. And this is all revealed in my Discord channel where I show my full broker statements. I invested about 5,000 hours in learning very specific courses, trading courses, and spent about $4,000 on these courses. So at this point, you name a strategy and I will draw it up perfectly on how you are supposed to actually trade it. And yet, if you ask me which is the best strategy to use, I would say it is the Unfortunately, as the name of this channel suggests, the entire trading world seems to have a large amount of paradoxical concepts in it. So the best answer actually to all of the questions asked at the beginning of the video is there isn't one. It's like asking how do you cook good food? Like, there isn't one. I'm sorry, but it's a little bit complex than, hey, just use a frying pan, right? So, because that's the actual level of detail most people on the internet go into. Not me though, so buckle up. Are you ready to learn what it takes to be a profitable trader for absolutely free in this video series that I'm putting out? Then please bookmark this video and subscribe, because the next video will come out in a week, just so you can keep track. So let's go over the questions again and I'll explain it in a bit more detail. What is the best platform for trading? There isn't one specific platform or broker. It depends on your strategy. What are the best hours to trade Forex and stocks? Well, there isn't really one specific time. It depends on what instrument you trade, for example. What is the best strategy to use? Well, there isn't one. It depends on your availability, your experience, and your personality, and so much more. Sorry, there isn't a simple answer. We will need to delve a little deeper to answer these questions. So I will pull apart each question to its basic components. Also, I will be only answering the first question mostly in this video, but this is just the first video in this video series. So if you feel like you know everything about brokers, feel free to just skip to the next one. Let's start with the first question. What is the best platform for trading? So this is a very common question, and what most people actually mean is which broker to actually deposit your money into, who will allegedly place your money into the markets for a fee. Each broker has a different fee structure, so this question should really be, which broker will suit my individual trading style the most? Which broker is safe? Or which broker will charge me the least amount of cash for trading a specific way so I can make the most money? Or which broker will make me the most money with my specific strategy? Well, since you've asked it this way, I will tell you. So to begin with, there are two main categories of brokers: regulated and unregulated. A regulated broker follows rules set by official government financial people, making them safer to use, whilst an unregulated broker has no supervision, making them riskier. Regulated brokers basically have the same level of government regulation as most trusted brick and mortar banks on your high street. For example, in England, XTB is such a broker, which is regulated by the Financial Conduct Authority. Whilst unregulated brokers can just sort of poof, disappear with your money in some extreme cases. By the way, this is what happened to me. However, that does not mean that an unregulated broker cannot be trustworthy. I have some money with IC Markets, for example, which is unregulated, but there are most certainly scams out there in this category also. So which type of broker do you think I lost a $56,000 account with? Yup, you guessed it. It was an unregulated broker called My Forex Funds, which no longer exists, of course. I was actually 12% in the profits at the time, which made the event so much more painful. An expensive lesson to learn that hopefully you don't have to make after watching this video. So in the unregulated category, we also split further into two categories: proprietary firms and just regular old brokers. With prop firms, you pay an upfront fee, pass usually 2 stages of challenges, then you get access to a predetermined amount of money to trade with. Let's look at FTMO, one of the most trusted prop firms in the world, which I also use, link in the description below. So anyone can do this, by the way. For example, if you purchase a $200,000 trading account with FTMO with an upfront fee of $1,080, you first have to make the profit target of $20,000 on a monitored but simulated account, demo account. This is step 1. Once you pass step 1, there is step 2, the verification phase. Here you have to make an additional $10,000 in trading, or 5% of your account size. Once you pass that as well, congratulations. You have a live account of $200,000. And now once you have that, any profits that you make on top of this $200,000 account, you get 75% of, plus a refund of your initial investment of $1,080 in your first payout. However, if you lose all this money, you do not have to pay it back. No risk. You only ever lose your initial fee of $1,080, but there are a bunch of rules which you also have to follow, which can make it a lot more difficult to trade this way with proprietary firms. Oh yeah, and of course, if you lose more than $10,000 in a single day or a single trade, or $20,000 overall in the whole account, you lose the entire account and you have to start over again. So let's just pause for a second right there. If you have gotten this far in the video, you're actually one of the few people that actually has an attention span longer than a field mouse and is way more likely to actually make it as a trader. Bloody well done. So now I will explain the fee structure, which all kinds of brokers actually use a variety of to charge for their services. This applies to regulated and unregulated brokers and prop firms alike. Some will have just one of these fees, some will have a mix of these fees, some will have great conditions, whilst other brokers will have horrible, horrible policies that will make it virtually impossible to make money with some strategies. So number 1, the biggest fee, far by historically, is spread. It's like butter, as in it has ruined about the same number of lives as cholesterol. I joke, but spread is one of the most difficult to understand. Things will only get easier from here, so bear with me. Spread is the difference between the buying price and the selling price of a financial instrument. So if you were to trade a foreign exchange currency pair, euro versus the Australian dollar, euro AUD, on this specific broker that I use, which is FTMO by the way, they have amazing spread usually, link in the description below. You could only buy or sell at a worse price than where the market is actually at the moment. So the difference between these values is called the spread. This is how brokers actually make their money. Let me explain. Pay attention to 2 numbers here. The sell price at 1.61201 and the buy price at 1.61214. If you were to buy or to go long on this, or bet that the instrument euro AUD will go higher in price after you actually got involved, you would buy at a price of 1.61214 and be instantly in drawdown of a few dollars, depending on how much money you're actually risking on this trade. So the market would actually have to move in your favor a little bit just to actually break even on your trade. If you lost this trade, then the spread fee that you paid would then be additionally added to your loss. Bummer. On the flip side of the coin, if you were to go short or sell this asset, you could only do that for the price of 1.61201. Again, you would be in the same drawdown instantly, and again, the market would have to move in your favor just a little bit to break even. So the bigger the spread, basically, the more you pay. Regulated brokers have much higher spreads usually than unregulated ones. You pay for that extra security. But is it worth it? Up to you to calculate that based on your trading style and your risk tolerance. Got it? Good. Now let's move on to the simpler stuff. Oh, by the way, all of these fee structures work the same for stocks, forex, indices, in crypto, you name it. There might just be additional fees on some crypto stuff. Okay, so number 2 is commission. Commission is a fixed fee or a percentage charged per trade. Some brokers charge a fixed fee, which usually is called a round trip. For once you think ahead, you will know that you are charged to enter and exit the market with every trade. This fee is around $3, $4, $5 per contract. So I told you this was easier than spreads. Okay, so here comes number 3, overnight trades, aka rollover fees or swaps. So these fees are charged when a trader holds a position overnight. Simple, right? So if you're a day trader, you don't really need to worry about this, but since I hold trades for a few weeks at a time, this does add up. However, there is a bit of silver lining in this. This can be a fixed amount, but more commonly calculated based on position size and kind of voodoo magic called interest rate differentials, which I won't really go into because you don't have to calculate this. The brokers will just basically tell you. You know, the biggest thing I look at that I told you about earlier, well, here it is. It's leverage. This is number 4, leverage. A huge consideration for me personally and many professional traders that have already made it and are playing around with a few different accounts. Leverage is super important. It allows you to have more buying power in your account than the money you have in your account, okay? So without leverage, you could only risk a minuscule amount of your money at a time, maybe around 0.1% of your account. So on a $10,000 account, you could only risk about $10-ish. So that won't really get you far, as you can only realistically win about 10 or 20 bucks at a time. Sounds fun and profitable? No, it does not. So you have leverage on regulated brokers, usually at around 1 to 30. This would allow you to risk more, way more, so you can actually make money trading. So you could probably risk like 1% at a time. So on a 10K account, you could be playing with about 100 bucks at a time. However, once you gain a bit of experience and are ready to risk more of your account at a time and trade multiple assets at a time to maximize profit, like me and many other traders that I know of that are actually profitable, you will need much higher leverage than that. Unfortunately, higher leverage also comes with the unwanted faff to put your money into an unregulated broker. So you will have to deposit and withdraw your money usually through crypto and then back to fiat currency again, which is fine for some people, but it was a real pain in the ass for me, especially if you move around constantly in the world. Like I have been traveling to different parts of the world and trading from different parts of the world, which is actually the freedom that trading can give you. These unregulated brokers can give you leverage of up to 1 to 500. So where you can literally risk about half of your account at a time without batting an eye. So with a 10K account, you can risk about 5K, no problem, no questions asked. But as you can probably see, this is way riskier, so proceed with caution. This is for advanced traders that have been trading for many, many years. However, once you get to this level, it's also advisable to do a thing called capital partitioning, where let's say we have a total allocated trading capital of $200,000. You would only deposit like a quarter or half, like 50 grand or 100 grand into one account at a time, as accounts are actually way more vulnerable to getting blown, which actually should be calculated, which is also fine. It hasn't happened to me yet, but if you actually look at my backtesting results, I will probably blow an account every once in a while, and that's absolutely fine as long as risk is managed, and it's just a total cost of doing business. Anyone that tells you otherwise on the internet is lying to you, probably to buy something of theirs or invest money with them or something. Let's say we capital partition into 3 sections of our accounts. We double one, we blow one, and then we double another one. So these two cancel each other out and we're left with a doubled account. So that's how trading works. So these were the most important fees to actually consider, in my opinion, in general for brokers. However, the broker can also charge you account fees for managing your account, depositing, withdrawing, inactivity, stuff like that. So I also heard of margin interest rates in some cases, which could be mentionable, but it's usually not that big of a deal. So I hope you got a lot of value from this video. And guess what? If you have gotten this far, that means you liked it. Maybe, I hope so. Feel free to keep your eyes peeled for my 20,000 euro giveaway. So this 20,000 euro giveaway I'm doing, where I'm taking one person who I will give my full and undivided attention to for a whole month. The link is up there. And that person can come and copy my trades and learn everything that I'm doing, which has increased my account by 50% in the last 3 months. So the video is right there and in the description also. So anyway, if you like the video, then good. Keep your eyes peeled for the next part of this video, which will tell you everything you need to know about how much money you need to start trading and where to actually look at the charts. So I believe in you. You can do it. If a dummy like me could learn how to trade, trust me, so can you. Until next time, happy trading.